All right. Today's SPY was up 1.07%, and we did get FOMC. And on FOMC, we did push higher into the close. And the first thing I want to talk about is how much high volume that we had today. And if you look at the data in the internals of the market, we didn't even have that many people shorting the market. So a lot of this volume actually appears to be organic buying and not just short covering. Now we do need to be careful because SPY did gap up, and we know gaps typically fill, but we also have plenty of gaps to the upside. So there's no surprise that these gaps could remain open, and there's no guarantee just because a gap opens that it has to fill within any time frame. So bigger picture, we need to seriously consider the possibility this was a stock market correction, which is now starting to get high volume buying. And anytime you see high volume buying coming off of a low, that could be the low, and that you're not actually ever going to come down and break that low. And that is why I've been talking about the bullish scenario. We need to see a higher low into a higher high, and it could be during that higher low that we close the gap below. So a lot of the topics we've been covering are playing out perfectly, and we just need confirmation of whether or not we are still in the downtrend, or if we are breaking out of the downtrend and going into an uptrend. And if we're going to stay in a downtrend, we're going to be expecting something like this, where we go higher towards a resistance and then reject it and continue lower towards another lower low. So both scenarios are valid, and that's why I tell you, let the price action do all the talking and be prepared for either scenario. And even in the downtrending scenario, we did need a lower high, so this bounce should have been no surprise. It's just a question of where is that lower high going to end if it's a downtrend, or are we going to get the bullish scenario where we make a higher low into a higher high and break out of the downtrend? It really doesn't matter which scenario you prefer, because either way you need to manage risk around these critical levels. And the most critical level I can see in SPY right here is this break above 421, because if we were just going to get a lower high rejection, it could have been easily the breakdown of 421. And one day above that level doesn't mean anything. So if we can get more confirmation and we continue to close above SPY 421 and break back over a rising 200 daily moving average, this could start to look bullish very quickly, which could confirm the bottom is in and the correction is over. So SPY 420 to 421 is a very critical zone, and whether or not we are above or below that level is something you should be aware of. And we did open a gap below at 418.53, and there's a good chance that gap will fill during the pullback to a higher low or the next lower low down. So don't focus too much on the gap right now. Watch the resistance above in the 200 daily moving average just above 423 and the negatively sloping 20 daily moving average just below 426 are very valid resistance levels, and if we break those, we should go all the way up to 430. On the Nasdaq 100 triple Qs, we're up 1.74% today, and we did break above that resistance at 355. And the next resistance will be the negatively sloping 20 daily moving average and 50 EMA right around 360. If we push through all of that, we could push all the way back to 370. And just like SPY, if we want to get bullish, we need to see a higher low into a higher high breakout, and that will confirm this downtrend is over, and we could be ending the correction and going back into a bull trend. The critical support from here will be down here right around 355 and 347. In the Dow Jones, we were up 0.67% today, and the Dow Jones pushed through 331 and hit the next resistance at the 20 daily moving average at 333. And if we continue any higher, we're looking for a push towards 336. As I've said many times, to get bullish, we need a higher low into a higher high. So if you want to wait and you want confirmation of a reversal, that's what you're waiting for. And the downside critical support remains 327 if we break below 331. On the Russell 2000 IWM ETF, we were up 0.57% today, and we're back above 164 for 2 days in a row. And I still think there's a very good chance we're going to push higher towards 169 to 170 over the next few days. From there, if we get a higher low into a higher high breakout, we could push as high as 176, and we could start to show evidence that we're breaking out of this downtrend if we can see price action clearing above 176 and breaking out of that resistance trend line. Downside critical support levels remain 164 and the previous closing low at 162. On the ARKK ETF, we're up 0.66%, and ARKK is pushing higher towards resistance, which we're looking for at 36 and 37, and the critical resistance is still 38, and we need to break 38 before we say we're getting bullish, and we need to see that higher low into a higher high breakout. If we get a lower high rejection, it's still possible we go down here and fill this gap below 32. On the VIX, we were down 7% today, and the VIX did something very important today, because not only did it crush down below 20 a few days ago, but it also crushed down below 18 today. I told you many times, if this was just a pullback or a correction within a bull market, we should see the VIX crushing down below 18, and that is exactly what happened today. So I think the bulls are getting more and more traction between the high volume buying in the indices and the VIX breaking down, that we could still be in a bull market and we could be ending a correction. On Bitcoin, we're currently up 1.8%, and Bitcoin is slicing through this resistance currently on high volume buying, which is that resistance at 35,000, and the next push higher could take us higher towards 36 to 37,000. This looks like a bull flag breakout and a very strong bull trend, which is very evident by all of the moving averages positively sloping and all stacked to the bullish direction. As I've said many times, Bitcoin remains bullish above 32,000. So stay bullish as long as we're above 32,000. On Tesla stock, we're up 2.4% today, and Tesla has the second day bouncing off 197, and we're looking for upside resistance right around 208 and 214 to 215. And if we break through that, we're looking for 230 and then the gap fill at 242. This is still a downtrend, so don't get overly bullish. And if we break below 197, that's a sell signal that we're going down to the 180s. On Apple stock, we're up 1.87% today, and Apple is bouncing up towards resistance, which was the expectation to find resistance between 174 and 175. And because we have earnings tomorrow, anything is possible as a catalyst. But I would like to see a higher low eventually into a higher high breakout of this resistance trend line to tell us we're breaking the downtrend and getting more bullish. That's going to require a break above about 176 to 177. So wait until after earnings and then assess the price action, and you can get more bullish if we can break out of the downtrend. If we're bearish, we should get rejected from a lower high and then continue lower towards this gap fill below 159. So jumping back over to the S&P 500, it is very possible this was a correction within a bull market, and we are now getting high volume buying that could be telling us the bottom is in and we're going back on the bull. But regardless of whether or not it's a bull market or a bear market, this is very clearly still a downtrend of lower highs and lower lows. So if you want to say it's still a bull market, we really need confirmation that we're reversing the downtrend. But regardless, you should be trading the critical levels and managing risk around those. Whether you're going short or going long, it does not matter. As long as you manage your risk, you can still have profitable trades around these very critical zones. Even in the bearish scenario, it's possible we continue to push higher, so be patient and be disciplined and manage your risk around these very critical levels. And if you're patient and you wait for those critical levels, you'll have well-defined risk, and that way, even if you're losing on your trades, you shouldn't be blowing up your account, and you should be winning more than you lose as long as you continue to trade with the direction of the current trend. We're absolutely crushing this market on the Stock Show Discord and Bank Trade Alert, so if you want to join either of those services, you can find out how to join by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.